Hello traders, welcome to this video again on the euro dollar and pound dollar. My name is Chris from Elite Currency, and before we start, quick update on Black Friday discounts up to 40% off, another 7.5 days, so plenty of time to shop around and take a look. This discount is basically valid for all purchases, not only the first one. And yeah, specifically SWAT 2.0, of course, that's my own course with 70 plus videos, 22 plus hours, all the indicator systems, 600-page ebook. Really, really a lot of value there. So, of course, I recommend that obviously as well. But all of these things are great. Black Widow, ECS Live, these are manual. And of course, our automated trading systems as well, rental options there, all have discounts. So, yeah, 308 euros now, very good lower price here for SWAT 2.0. Let's take a look now at the euro dollar. Euro dollar has been pretty choppy in November, as you can see in this picture. How that choppiness looks like. Before that, we had a pretty good trend up, but yeah, it has been ranging for quite a while, as you can see. Even in here, quite some ups and downs in the last. That's not only November actually. This is going back all the way to July. So that's already quite a while. It's almost all the second half of 2020. But we do see some structure in the sense that this looks like an ABC, this looks like an ABC, and this looks like a C for a bigger ABC completed. And then we saw a move up. So although it's rangy and choppy, there is some logic that we can find in this chart. And now we're looking at a correction of this bullish swing. So let's dive into that. So I was looking for a break above 119. That didn't go anywhere. It slammed into the previous top, in fact, and turned quickly lower. But as I mentioned in the video, as long as price stays above the 144 EMA, we're still in bearish territory. Bullish territory, and this could still bounce at 144 EMA. We really need a break below that before we have more space down to the long-term moving average 610 EMA, and you can see that space right there. Also, if we add the fibs on the swing, the bullish swing here, that impulsive swing that had 5 waves, then if this is an ABC pattern, which it certainly looked like at the start, and still could be, in fact, wave B can be choppy, then we need a break below the 144 EMA to confirm the push down to the 61.8 fib or 78.6 fib even at 117.25 or 116.70. So that we never got. In fact, it was a wick. And as I explained in my live webinar on waves earlier this week, that if there's a wick, we need to close near the low to indicate selling pressure before we get the breakout. Because if there is some wick available here that indicates a bounce at the 144 EMA, we might still see a push up to retest at least the previous tops. And that's what happened. So this is a difficult, I would say, choppy price action at this moment. It's really getting quite ugly. It could still be a wave B, in fact, with an ABC kind of pattern in it. So once again, I would say now if it breaks the 21 EMA rather than the 144 EMA, this is probably becoming more likely to fall. And the reason is the difference between the last time is that this is the third breakout, in my view, and also the second attempt of the 144 EMA. So when that happens, it starts to become more likely that we get a break rather than a bounce. All of that I explained, by the way, in my SWAT 2.0 course. This could still be considered an ABC pattern within maybe a wave 2 or a wave B, and another push up is likely. But if it now breaks below the 20 EMA, I don't think I necessarily need to wait for the 144 EMA break, because we just had 2 recent bounces. So I think in that case, if it breaks the 20 EMA, basically my point is that it will break the 144 EMA too. So then it has this space, and I expect to bounce probably at the 78, maybe the 61.8 fib for bounce up, because in that case I expect an ABC to be completed, and that could be part of a bigger bullish ABC. So the red ABC would complete a bullish wave B, and I expect to bounce to 78.6 fib at the start of the bullish wave C, or a 1, 2, 3. By the way, that's also possible, not ABC, but a 1, 2, 3. That could be another variant that is, that could be very likely as well. Based on the daily chart, you can see why, because if you look at this, it looks like an ABC is finished here, so this could easily be 1, 2, and up for 3. So once this range is broken, this half of your range almost now, once that breaks, I think we're going to get a new uptrend because of the momentum that we see here, range, and then we should get another uptrend continuation. Unless price breaks through 115 and the 144 EMA, then we might get a bit deeper retracement but at this moment it looks bullish. Momentum is up, flag. So typically we would expect this to break to the upside. Okay, so this could easily be wave 1, 2. That's my point, and go up for 3. All right. Anyhow, what if it doesn't break below the 21A or close below it? I should say. Right. I'm looking specifically for candle closes. Also, maybe a couple of loose candles below it, full 4-hour candles below it to confirm that breakout. But what if price stays above that zone? What if it stays above 118.25, 118.50, right? Then, well, it could easily also be a pullback for a continuation higher. I would say that if it makes a pullback and bounces and then starts to break above, there's a lot of resistance. So this bullish breakout is a bit tricky to trade, but if it then really starts to push finally above the 119 for the third time, right, or maybe even 1, 2, 3, 4, 5, 6 time, then eventually this is likely to break to the upside eventually, right? That resistance will eventually break, and in that case it's starting to more look like an ascending wedge pattern, and this could break to the upside. And well, in that case I think it's good to look for a flag pattern and a break of that flag pattern on a 50-minute chart for a continuation higher. Once again, if you're curious about all of that, how to use fibs, fractals, moving averages, check out this SWAT 2.0. Great discount, 35% off in fact. All right, pound USD was in bullish territory as long as it stayed above 132.50. It tested, it went quite close to that level, but ultimately bounced at 132.65 or 64. And moved up, retraced, bounced again at the 21 EMA. So it looks like a triangle pattern in an uptrend channel at this moment. So let's draw that channel here so you can see that a little bit better. And on the hourly chart, you can see the triangle a little bit better. A, B, C, D, E. Maybe let's check if there was a higher high here. There was actually a higher high, so that's incorrect. Sorry for that. But anyhow, some kind of correction or choppiness there visible. So this could be a corrective pattern from our upside. Let's take a look at the hourly chart. I think a break above this double top would confirm. Break above 133.80 should send this higher up to a 134.75 for the moment. As long as it stays above 130 250, 133, which is basically still a support zone, I think we're looking for an upside. Although I would say that maybe now the buyer should step in a little bit higher. If this is an ascending wedge pattern, maybe it shouldn't go that deep. Maybe about here should be the max, 132.80, 133.10. If it does go there, let's see if there's a bounce. But if yes, it could just indicate a good bouncing spot because of the previous support levels, and then move up. If it breaks through that, that could be a warning sign for specifically a candle close below the 20-way, that this bullish uptrend channel is over, and we might get a bigger correction down to the previous bottom and the long-term moving averages, and there could be a bearish break below 132.70, and would be good to get 4-hour candle closes below the 20-way, and there's some 4-hour confirmation there, but then look for maybe 50-minute flags for continuation lower. That's how that's my 2 cents, that's my view, that's my plan basically. And wish you all great trading. Check out those Black Friday discounts. Still 7.5 days left, so plenty of time. And wish you, once again, great trading. Cheers.